This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
Has your 401k become a tech fund? Whether or not you planned for it to or even realize is the circumstance in the year 2025 you might find yourself in. And with all the market ups and downs, you might be wondering if that's the place to be. I guess your 401k shouldn't be any kind of fund, right, Abe? It should be a diversification. That is the goal, right?
Yeah, you should probably have a handful of stocks, funds, ideally be balanced, and have a good split and combination between, growth, domestic, international, maybe some fixed income in there.
But of course, first of all, this is Abe Abich, founder of Abich Financial Services. I'm Heather Branch here with Abe to ask for his insight on things we need to know about. 401k is obviously one of, if not the most popular way Americans save for retirement. So when it comes to understanding them better, sharing education and knowledge in this space is critical for those who are, well, for all Americans that save, but for those in particular who are close to retirement, understanding their options and thinking about 401ks, because it really can be hard to diversify what's in them because you are subject to whatever your company has signed up for and what the opportunities are, the investment opportunities are within there. They're mostly funds. I mean, have you ever seen a 401k where you can actually have actual single individual stock options? Is that ever a thing?
No, I haven't seen that. Maybe company stock that you're working for, but typically it's going to be life cycle, target date funds, growth funds, balance funds, international funds. A lot of the target date life cycle, we call them like 2020, 2030, 2040, 2050. And again, the farther you go out, the more growth you're going to have in them because the longer you have to invest and the further away you are from retirement. So if you purchased a 2060 fund, that might have 70, 80, 90% in stock or growth-focused funds versus, safer funds because you've got, 35 years until you retire.
Yeah.
So we see a lot of those in 401ks, but they can become lazy because they're just slowly moving, over the years and not as efficient as you might want. And then also the costs in 401ks we want to be careful of too because the funds usually aren't the most cheap out there, compared to Vanguard or Fidelity, ETFs or something like that.
Okay. So first of all, for most Americans, when we are looking at our 401ks, the majority of us are just trying to find out one thing. Is it up or is it down? With all the market volatility lately, people maybe you're checking it more, maybe you're just avoiding it altogether. But regardless, very few of us actually dive into what is in our 401k. And this article on Investopedia.com is telling us, Abe, we should be looking more because what is happening is a lot of people might find they have way too much invested in tech. And yes, of course, tech has been up. As we know, we live in the digital age, not surprising. But we don't want our 401k to become some sort of tech fund. So thinking again about where we are as Americans and what our investment opportunities are, how can we go about understanding what our holdings are and look to diversify within our 401k accounts?
Well, the first thing anyone can do, regardless of your age, we work with people primarily closer to retirement, usually 55 and older, and most of our clients are in their 60s. So that's a really, really appropriate time to have a very good idea as to what you're invested in because you're running out of time. You're about to retire. You've already retired. You don't have the time anymore to continue to work and to recoup losses, just to waste 3 to 5 years to dig out of a hole like in 2008. So the first thing anyone can do, regardless of your age, is review your holdings. Get an analysis done of what you're invested in. And by working with a retirement planner, a financial advisor, most financial advisors should be able to run that analysis for you to see, hey, Heather, you're 90% stock and 10% in bonds, or 80% stock, 10% bonds, 10% cash. Okay. And actually, you should be increasing stock or decreasing it, or increasing fixed income or decreasing cash. How would you know unless you had an analysis run? So by working with a professional, financial professionals, financial advisors, retirement planners can run those reports to show you black and white, hey, here's where you are on paper. You need to understand where you're at before you make any decisions.
Yeah.
So regardless of age, you can have an analysis done. And just a couple key takeaways from this video podcast today is the first one. Review your holdings, get an analysis done so you know where you stand. That's why we call, our complimentary meetings, where do I stand plan? Okay. Or where do I stand plan? Where do you stand today? Like with your investments, with everything in your financial picture, and have you done enough? And if you've done enough, what are the areas we need to continue to grow and focus on and also improve? Number two, look, the markets can be up, they can be down. They've been on quite a run since 2008 or 2009, again, 17, 18-year bull run where the markets have just gone pretty much straight up, except for 2022. And now here in 2025, we've had, some volatility with tariffs and everything like that. Yep. This situation is probably going to be figured out here sooner than later. And just as quickly as the markets have taken a dip and a dive, they can quickly go back up and hit new highs. That's going to happen probably sooner than later. Now, I don't know. If we knew, we'd be in Tahiti, right? On an island somewhere. Mm-hmm. But you want to keep a long-term perspective. That's number two. Action items from this video: review your holdings and analysis. Get an analysis done of your holdings and entire portfolio. Number two, focus on your long-term plan and keep a long-term perspective. Because if you're like zooming in and watching the news every day and watching online and watching your accounts and balances every day, and you're following the news every day, you can get kind of sucked into that. And, the news isn't always best to watch because it may not be affecting your portfolio near as much as you think. Yeah. You might be fine, all right? Yeah. What if you had, the money that you needed to have saved last year, the year before, heading into this year? Yes, you might be down 10% or so right now. Is that going to change your long-term retirement plan that much? It may not. Mm-hmm. For some people, it might. But for a lot of people, most of our clients are still totally fine. And so when the markets come back, they'll come back in time, and then they'll hit newer highs and have higher values if they're just patient. Focus on your long-term plan, long-term perspective. Zoom out. Don't zoom in and look at what's happening today, this week, the last couple months. Look at what's happened the last 3 to 5 years. Focus on what will likely happen in your plan the next 3, 5, 10 years. Finally, if you don't have a plan, action item number 3 from this video is to put together a plan. Because when you have a plan, and we preach this message week in and week out, Heather, on our podcasts, in our newsletters, on our media shows, to have a plan, because when you have a plan, there's going to be good times and bad. There's going to be a lot more of those over your lifetime. Sure. And when it's good, right, we love it when the markets are up, and everyone loves it when the markets are up. When the markets are bad, if you don't have a plan, and you are 80, 90, 100% in stock, you didn't have a plan, you don't have a plan for principal protection, you don't have dry powder on the sidelines, you don't have a plan for taxes and healthcare in your estate and all these things that are just as important as your investments, then you're probably going to be freaking out and panicking more than someone that has a plan, someone that's reviewing and monitoring that plan with you several times a year. Okay. Right? Yeah. And so that would be my feedback and my thoughts for people in this environment right now. And then if you want to dial it in a little bit more right now, in that plan, our clients have a very well diversified retirement plan and investment plan. They've got global diversification. Global diversification is key, not just focusing on domestic stocks and companies, but international exposure too. I mean, there's a handful of countries that have done better than the United States this year, and those indexes are up. And so global diversification is key. Tactical management for a retiree is also very important. Tactical management of their money means proactive hands-on management. That's usually managing the portfolios and rebalancing the portfolios monthly. Mm-hmm. So you can imagine, Heather, that things typically can't go awry and astray too much in 30 days. A lot can happen in 30 days, as we've seen recently. Yeah. But when we're always coming back to home base and rebalancing and actively managing the portfolio, that can help to reduce and manage volatility. Second, you want some principal protection mixed in there. I mean, if you're about to retire or already retired, you don't want to go back to work. You're now living on fixed income and your nest egg for the next 30 to 40 years. You need some safety in there. You need some added sleep insurance, added peace of mind. That's going to come through principal protected pieces of the portfolio. Okay. Yes, you're not going to make as much as you would, Heather, in stocks and ETFs and fancier things that have more growth, but you need a combination. Most retirees need a combination of really good, solid growth and also safety and protection. with that, you can have stocks that pay dividends. Even when the markets are down and stocks are down, you can still have stock portfolios or pieces of your portfolio that continue to pay dividends. That's what retirees need, is growth and income. Finally, you can even have buffered solutions in your portfolio that can not only make money or capture return when the markets are up, but also even potentially make money when the markets are down. And that's part of this whole buffered product line, structured notes, dual directional products and investments that have pros and cons. But when you put all these pieces together, instead of just relying on stocks or stocks and bonds or stocks, bonds, and cash, and you incorporate outside of the box ideas and strategies, put together a really well thought out, diversified and balanced plan, that is key for so many pre-retirees and retirees. And our clients are pretty comfortable right now. You know, if you just stop watching the news as much, focus on your own personal finances and retirement plan, that's really key. Control what you can.
Diversification in retirement means such a different thing than diversification does in your growth and earning years. And so it's important to understand how to define diversification for retirement versus working years, which of course, Abe and his team ready to help you better understand what that is. TheRetirementKey.com is our website and where to go to start this conversation. I also wanted, just because we were talking about the idea of 401ks and did they accidentally become a tech fund unbeknownst to you, and now you look at it and you're like, oh my gosh, I have all these tech stocks and I want to diversify.
Right.
Speak to the importance of understanding your options once you hit that age 59 and a half, then, about as far as diversification goes and taking control.
It's something to really pay attention to, because it can be really easy to have a big weighting in companies like NVIDIA, Apple, Amazon, and Google, and Tesla, Netflix, companies that have driven the markets for a long time, especially the last few years. But you've got to be careful, because if the weighting is too high, too big in those companies, just as quickly as they can rise and have wonderful years, they can have huge drops and are being hit the hardest right now in this market volatility. So at 59 and a half, which you just asked about, Heather, at 59 and a half, for most 401k and TSP participants, you are now IRS age eligible and able to roll over part or all of your TSP or 401k into a traditional IRA outside of your workplace plan without tax or penalty. And that can be something to really look at your options, because again, in your TSP or 401k, you're going to have limited options. The funds aren't managed by a money manager usually, unless you're paying someone to do that. Most plans don't even offer that option. In an IRA on a major platform or custodian like Charles Schwab, which is where we manage our clients' dollars, or a Fidelity type of platform, there are literally going to be thousands of options that could be a better fit for you in your retirement, your investment accounts. Oftentimes lower cost. And so because of that, the IRS says, well, wait a minute, if you're going to retire at 65 or 63 or 68, you know, you're now only 3 to 5 years away from that desired retirement goal. You should have more options available to you outside of your company plan. Something that a lot of government employees don't even know that have TSPs until we tell them so.
Right.
So you got to know the rules to the game and understand the rules to the game. That's also a very important part of a retirement plan, and why it's so crucial to hire somebody to kind of be with you like a guide right by your side every step of the way as you transition into retirement.
A guide to help you conquer your retirement mountain. Let's go ahead and talk about your book real quickly, too, before we wrap up. The Retirement Mountain, the 7 Steps to a Long-Lasting Retirement. Abe wrote this book, and happy to tell you he did not go too far as far as what you can expect for us to absorb when it comes to a sit-down, because it's only about 90 pages, maybe 100 pages, but you can read this in a couple hours on an afternoon, get a lot of education as far as what you want to understand, what Abe wants you to know about as you get closer to your retirement or you're just into retirement. If you want a copy of this book, lots of ways for you to get a copy. You can go to Amazon to purchase the book. Of course, anybody that comes in and has a consultation with Abe, we will give you a copy of the book complimentary. We also have a free chapter of the book you can download to get some more insight on what the book has to offer on our website, TheRetirementKey.com. We also have links to the book posted in the show notes, so you can just click there. All right, quick review. Number one, we got to get an analysis done to find out what our holdings are. If you're looking for an independent fiduciary to help you with that, Abe and his team here to help you. That's that first process.
Right.
Where you have the where do I stand plan process, just understanding where you are right now. And that's that analysis. Then we got to keep our long-term perspective. Thinking about for retirees, though, a lot of people get impatient and upset and nervous when they hear any financial expert say to them, just hold on, it'll come back. And so that's not what you're saying here. You're saying what?
No. You don't want to be in a position where you have to wait to ride it out and ride it back. No, you want to plan a proactive plan in advance that's going to handle these downturns. It's going to handle the volatility, lower it as much as possible. You want a combination of growth and income. I mean, really, you're only going to be in the position where you need to ride it out and wait for the markets to come back, Heather, if you've taken on too much risk and if your losses are too big for you to do something about it right now.
Okay.
But for most Americans and most people that we're meeting with right now, that's not the case. Okay. You can take action right now and be very proactive.
Take action right now, which is, of course, in the end, putting it all together in a plan, particularly for those of you who are 59 and a half and older. If you have a 401k, if you want to know more about the option to roll it over into an IRA that you can have more options, more investment options within that plan. These are all the things that Abe and his team are doing every single day in the office, and they are here to help you with as well. It can feel overwhelming and confusing. There's a lot of moving pieces in this planning process as you move away from your growth phase and into your income and distribution phase. It should be an exciting time there, right? Like, it's finally get to spend the money we've worked so hard to earn and save.
Of course.
Of
course. And man, a lot of the stress can go away when you have a plan to follow.
That's it, which is the goal of every plan that they build at Abish Financial and are ready to build with and for you as well. So again, find us at theretirementkey.com. We've also got links posted in the show notes, so you can just click there, or it's theretirementkey.com.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.